Hello, everybody, and welcome to our online investor insights. We host these every 2 weeks online, and they're always posted in the Startup One Stop newsletter and various other places as well. I'm Bonnie Halper. I write the weekly Startup One Stop newsletter, which is free to register for. And I'll put the link in the chat. And I also work with founders to help them with their pitch decks and their talking points, because none of you know how to properly do a pitch deck. And I know you know that that's true, Ali, right? And we make introductions to strategic partners and investors where and when appropriate. And I want to thank Joseph for hosting us. Joseph, tell us about you and what you do.
Thank you, Bonnie. Thank you all for joining today. It should be a fun conversation. My name is Joseph Katz. I'm a marketer. I've helped many startups over the years. I like to say help startups go from unknown to well-known. Results-driven marketer, go-to-market strategies, growth, acquisition. That's sort of my sweet spot. I will put all my information in the chat. Happy to talk offline with anyone, and looking forward to today's conversation.
Yes, so this week, our guest is Ali Jamal from First FinTech Ventures, and he asked the attendees to be introduced first. Thank you for being here, Ali. We appreciate it. So, Ian, tell us about you, and we have to keep it brief.
Yeah, I'll do my best. So, Ian Garmes, I'm based in Toronto. I'm currently COO of Virtual Film School. It's a live online training program for content creators based in Los Angeles. I'm also currently a co-op fellow with Laconia Capital.
We love Laconia. We have them speak all the time. They're just so they're honest. So Balaji, and if I butcher your name, I apologize in advance.
No worries. Hello. Hi, everyone.
So what do you do?
Okay, I wasn't ready for that.
I'm sorry. Oh, we always have attendees introduce themselves.
He just joined as you called her name.
I'm so sorry.
Okay, no worries. I can go. So I'm currently building a platform named Streets, and the goal of Streets is to get people off of them by showing you exactly what to expect on any given night out. And we do this by providing real-time unbiased insights through content sharing and also AI recommendations for people. And ideally, Streets kind of works as a marketplace for venue managers where they can build their brand reputation, and consumers can kind of share with the masses and also get insights on what to do before they leave their home or kind of make a decision for the evening.
Oh, thank you. Nelson.
So I'm Nelson Hudas. My company is Hudas Communications International. I run a PR firm, and I help public and private companies get, are you ready for this? Amazing media coverage. So I pitch them to radio stations, newspapers, magazines, industry publications. I get them out there and seen and get them tons and tons of brand awareness. And that's what I do.
Nelson, I'm a recovering flap. You didn't know that. Pierre.
Did you call me, Bonnie?
Yes, go ahead, Tino. I called Pierre. I'm happy to hear from you anytime.
Sorry about that. My car audio must be wrong. My name is Tino Go. I'm the CEO and founder of Baru. And Baru is a gig platform for underused manufacturing automation. So we use these underused machines to produce products and local to the customer, effectively eliminating $7 billion of freight and warehousing costs out of an $18 billion industry. Now our beachhead market is cabinetry. Thanks.
No, thank you. So Pierre,
and we should be having our first $100,000 month this coming month, post our launch of the tech last month.
Oh, congratulations to you. Pierre, are you ready to introduce yourself?
Is that me? Can you hear me?
Yes.
Okay, sorry about that. I'm trying to fix some settings on my phone. Yeah, I'm a filmmaker. I have a video production company in New York City, and I'm also working on a TV series, science fiction TV series.
Oh, good luck with that. I just finished my book. AM. I don't know who AM is, but introduce yourself.
Hey, yeah, sorry, I think it's just my initials that show up over there. My name is Alok Mathur. I head strategy at Plenty. It's a late stage ag tech startup. So we build vertical farms. And yeah, just curious to learn more about Ali's investing process and philosophy.
Thank you so much, Laura Lee Kenny.
Hi, I'm a retired certified financial planner, and I'm on a mission to do a couple of things. One of them is to set up a nonprofit to teach financial literacy, mindset, and passive income streams to young adults. And with that, I was introduced to a new tech company last year, and I'm a VIP elite coach with Be Connected.
Oh, congratulations. Robin.
Thank you.
Robin, are you?
Oh,
are you-
did you say
there
Robin? I didn't
Yes.
hear you. I'm sorry. Hi, I am a consultant in a very niche for B2B tech vendors, startups called Analyst Relations, working with Gartner, those guys. I help startups leverage those relationships for their own benefit.
Oh, thank you. Andrea. We never know if she's available to talk to. She's all right, Ani.
Hi, I'm Annie, and I'm the founder of Influencers Powerhouse. So basically, we are the matchmaker between brand and the creator side. So willing to discuss the recent issue about the TikTok ban. Thank you.
Thank you so much. I'll come back to Andrea later. Brian. Are you able to introduce yourself? You're muted right now. Or Eva, who's also muted right now.
I'm
Okay.
in a cafe, so pardon the noise. I'm Eva. I'm building a media and technology platform specifically for social impact, activating audiences to actually take action after they watch a really good film or TV show. So awesome to see fellow filmmakers and entertainment people here.
Well, welcome. Joseph.
Hi, Joseph Thibault,
Yes.
founder of Cursive Technology, and we're focused on human verification through writing, which is mostly looking at ed tech space right now as like an alternative to AI classifiers. So we use biometrics to verify writing and authorship and create a new load of learning analytics that can be used to evaluate student writing.
Oh. Mark Weissman. Always good to see you, Mark.
Bonnie and Joseph and everyone else. Mark Wiseman, Managing Director with Navidar. We're an Austin, Texas-based boutique investment bank. I'm based in Cleveland, Ohio, and we work with technology companies doing growth stage capital raises and both sell side and buy side M&A transactions.
Thank you. Zarin. Joining us from either Switzerland or Turkey. I don't know where she is today. But...
I am in Zurich today. I was in Geneva, now I'm in Zurich, and I have a banking background, and currently I'm focused on strategic partnerships and business development, mainly in the areas of financial sector, so banking, insurance, CRM, fund management, comparison tool, asset management, and also e-commerce.
Thank you. Hal.
Hey, good morning, everyone. If it's morning for you. My name is Hal. I'm the founder of SubHub. We help builders streamline material procurement with manufacturers, and we change the way manufacturers reach and serve customers. It's a B2B marketplace with SaaS components.
Thank you. So the rest of the others were muted. I don't know if you have time to, if you can introduce yourself now, Andrea, or put it in.
Sure. Yeah. Hi. Good morning. Hi, everyone. I work for a Hong Kong family office in earlier stage investing, tech investing across most verticals. Most recently, we've just been trying to figure out how AI is affecting all the different industries, especially the legacy ones. Thanks. Good to be here. Thanks, Bonnie.
I hope I got everybody. And if I did, Ali, welcome and take it away. Tell us about you. Tell us about the fund, and then we'll open it to Q&A, questions and answers.
Sure. I'm now kind of full-time investing, but my background is in product and growth for startups. I've done that for more than a decade. Initially in Silicon Valley, then eventually kind of all over the world. I ended up spending a few years in East Asia, and then I ended up making my way to Latin America, led growth for a couple of different unicorns in Latin America. I was the head of performance marketing for Rappi based in Bogota, Colombia, and then the head of growth and performance marketing for PayClip and based in Mexico City. On the side, had been an angel investor for more than a decade. And during the pandemic, needed a new hobby, I guess, when everybody else was kind of doing their sourdough breads. I decided to mentor more startups and help out more startups to try to get more involved in the startup ecosystem. I'd already kind of had dipped my toes in, but then decided to do more. And so did more kind of mentoring sessions. And I'd already kind of been an angel investor on the side, but started doing more and more investing. And then kind of in that whole process, you're kind of spending a lot of time reconnecting with people. And so kind of telling people what I was up to and what I was spending my time on. And, like I said, I kind of been doing this off the grid type stuff of kind of being no longer in San Francisco and in, these far off places and doing these different things. And so a lot of people were excited by that, right? They were kind of just seeing their own kind of New York mindset or San Francisco mindset and opportunities. And I was talking about things that they thought were interesting, but they just weren't having exposure to. And so I ended up creating a syndicate to introduce these kinds of opportunities to the audience of people I knew. We kind of did our first deal in September of 2020. That deal did well. So we did another one and then another one. And, kind of kept on growing from there. I realized that I was enjoying investing in these companies, helping these companies out more than I was my day job. And so I left to kind of focus on that. And so, really kind of coming in and trying to be literally the first check in companies, particularly those in emerging markets and with kind of a big emphasis on Latin America, because that's where I was based. And so that's kind of what I'm doing now, is trying to be the first check in. We've done about 130 investments through the syndicate. 1/3 of our pre-seed investments have gone on to get accepted by Y Combinator. So trying to come in early, pick the best startups in the region and help them get to the next level.
And Y Combinator happens to be one of the accelerators that has an inordinate amount of unicorns.
Yes.
Yes. So what's your focus these days? And are you leading rounds now as well?
So, I feel like the whole term of leading kind of just depends on checks and check sizes and rounds, right? So if a company's doing a $5 million round, I'm running a 100K check, that's not considered leading. Right. If a company's doing a 100K round and I'm running a 100K check, then all of a sudden I'm their lead. So it really is more of a factor of how much are they looking for versus my conviction. And I find it's actually easier for me to come in before other people do versus kind of waiting for everybody else to figure things out. So I try to lead as many other rounds as I can, in the sense that I'm the first check coming in and I'm their first believer. But it also kind of just depends on what stage they're at and what they need help with.
I don't want to hog up the Q&A, especially if we have a couple of latecomers. Henry, do you want to introduce yourself? Or Maurice?
Yeah, happy to introduce myself. Maurice Wednesday. I'm the CEO, co-founder of Simplify. We're a software platform that digitizes trade workflow and financing for African SMEs engaged in cross-border trade. So a problem we're solving is that $300 billion of imports come into Africa every year, mostly through SMEs. So everything that's mission critical for consumers, mobile phones, laptops, rice, sugar, things that people can't live without. And a vast majority, nearly all of that trade is done through WhatsApp, text messages, and phone calls. So you can imagine the inefficiencies and around that antiquated way of trying to do business. So what we do is we make cross-border trade as frictionless as shopping on Amazon or Klarna for businesses.
I love the way you mentioned both computers and rices as basic staples. This day and age is true. Pratiksha, do you want to introduce yourself? You're muted right now.
Hi. Yeah, I would love to introduce myself. So I was brought into this call by Ian. So currently I am working with Ian as well on the virtual film school as a business strategist. And before this, I had tried to start up my own company, which was called ZZ, which was to create like sleeping areas or napping spaces on campus.
Oh, thank you. Oh, Eva, do you want to introduce yourself? Empathic bias. You can't pronounce it.
Oh, I already did.
Oh, you did. I'm so sorry. Because the names keep jumping around.
No,
I could jump in with an intro if that's all right.
Oh, sure. I asked you before if you wanted to introduce
Oh,
yourself.
yeah, I kept muting myself
Okay.
on my phone. Hi, everyone. Henry Ferguson here. I'm a part-time associate with Santa Clara and Santa Cruz Ventures. We're industry agnostic funds with university and geographic thesis. So if you are based in the Bay Area, starting something, feel free to reach out. I'm also pursuing my MBA part-time at Stern and looking for a full-time role in VC in New York City. Thanks for hosting this morning.
So, questions?
Whoever put the last LinkedIn link in the chat, that LinkedIn profile, that LinkedIn doesn't work. Just tried it.
You mean Henry or AM? But anyway.
AM.
AM.
Got it. I'll fix it.
Okay. So questions?
Yeah, I have a question.
Sure.
To Ali. So what are you looking for in your investment in the startups or the founders?
So I'm looking for things that I think can grow 100x. And I am willing to take a lot of risk in terms of geo and in terms of stage by being the first check. And so I want to have other things that don't have as much risk. So don't want to take as much risk on the founders. I don't want to take as much risk on the business or the business model. So, that's the kind of way that I think about it in my mind is that let's take risk by investing in outside the U.S., investing in countries like Vietnam and Colombia and Nigeria. Let's make sure that the founders have some sort of background and experience, and a business model that's been proven to be successful somewhere else. So that's kind of the way that I kind of frame it in my mind.
Gotcha. Thank you. And how do we pitch to you? I'll pitch now, but just so everyone knows.
You want to put your email in the chat, didn't you, Ollie? I thought you had.
Yeah, so I have an intake form on my website, firstcheckventures.com. And on there, it kind of goes directly to my email, but it also gives people a chance to kind of upload their decks and things like that as well. So that's probably the easiest way to do it.
Okay, thanks. Do you mind just typing in the website address again?
Yeah.
Thank you.
And let me also throw my LinkedIn in there because I guess everybody else is doing that.
So you don't like to invest in us Americans, huh?
So I mean I do, but it's harder to find the 100x opportunities, I think, in the US. And so I get more excited. I think in the US, right, everybody everybody finds the opportunities. Everybody sees what's broken, questions it, it goes and tries to fix it. In these other markets, I feel like it's harder. And so there's less people to kind of go and solve these problems. And there's more obvious problems that are just broken. I don't know how many people have spent a lot of time abroad, but 90% of people in Latin America don't have access to credit or debt, right? Half the people are banked, and numbers in Africa are similar. Numbers in Southeast Asia are similar. And so, there's just so many kind of everyday things that are broken, that it makes more sense to go and try to, in my mind, to go and try to build something for 80% of Nigeria's population, whereas most people building, or a lot of the startups I see from San Francisco, right, are trying to solve problems for the 1% of San Franciscans. And, I don't think we need a 500th dating app. Like, I get pitched dating apps, 3 times a day. Sure, it's a problem, right? Everybody needs to get laid. I get it. But I don't think they're coming with something that's actually unique, where there actually is product market fit. Somebody trying to figure out how do I get inventory financing in, Indonesia, that seems to be a much realer problem that if you are actually solving and you have some customers and you build something out, I would rather support that idea. I think other things, just general cost of labor is cheaper in these other markets. So an engineer in Colombia costs you $1,000 to maybe, let's say, $1,500 a month. So with a $50K check, I'm now giving you 30 engineering months. If I give you a $50K check in San Francisco and you have a bunch of AI engineers, that's like 6 months worth of salary, 3 months worth of salary, right? So what am I giving you? If I give you 3 months worth of some engineer salary, that doesn't really get you that much. So it just, what can I actually get for my money, and what do I actually see with the results of that money is just very different country by country or geo by geo.
Next question?
Yeah, I have a question. So any particular sector focus? I mean, you mentioned a few, but looking at the pattern of all your investments, are there some sectors that dominate?
Yeah, I end up doing a lot within fintech. I think that's one of the things that tends to be most broken globally. Banks are notoriously hard to work with, kind of across the world. And even if you have a bank account, they might not have a credit place for you. And then each thing that we in the US go to a bank for, right? They don't do that in other places. So we go to the bank and we could get a mortgage. We go to the bank and we could get a car loan. We go to the bank and we could get a small business loan. And we go to one person who kind of knows us, and they could give us all these things. In these other markets, each of those things is sort of different, and the banks that are there don't actually offer it. So even something as simple as trying to figure out how to offer car loans tends to be a very tricky problem in all these markets. And so they ends up needing, you're not going to have just one kind of JP Morgan. You're going to have 50 different sectorized kinds of JP Morgan. So, you're not just going to have a credit card. You're going to have a BNPL. You're going to have, which is a buy now, pay later, right? Because people don't have credit. You're going to have something to help you finance your house, something to help you finance your day-to-day payments, something to help you invest in the stock market, all these sorts of things that we kind of could go to one person for, or we tend to go to one person for. In these other markets, you have to go to 10 different people. And then once it's easier to exchange money, what I've noticed is that between supply and demand in most countries, there's just a lot of inefficiencies that evolved because of the lack of capital. And so as we make it easier to exchange money and have money flow, the marketplaces can become more efficient. So especially with technology. And so I tend to invest a lot in marketplaces, which are kind of going directly from supply to demand and kind of eliminating 4 or 5 steps of middlemen in between. And then I kind of think of prop tech as being a combination of either fintechs or marketplaces, but oftentimes people put them into other categories. But I also do a lot of prop techs because, again, I think it's one of those things that everybody wants, everybody, kind of desires to own property, to have a new apartment, and the processes across the globe, right, tend to be very challenging. Everywhere I've kind of lived, it's been incredibly challenging to find a new apartment. You have to deal with brokers get paid. It's an inefficient system, right? And so anything that could kind of help to make the marketplaces clearer and more efficient, I think end up being better for people.
So basically business mechanics, is that fair to say? And with particular focus on property. That's really cool.
Yeah.
Thanks.
And also just even consumers, right? Like I think anything that serves the middle class, right? The middle class across the globe has doubled over the last 20 years. The services that they're getting access to still haven't really evolved. And I think that's kind of one of the biggest things that you realize when you go to these other countries is even though their kids are now able to go to college and get a solid education, they still might not be banked in the same way. Their parents still might not have access to the things that just, you and I take for granted. So my biggest focus is there's now this huge amount of people that are going to be demanding new services. Their kids are going to be demanding new services, and who's building with them in mind.
Right. Yeah. Thanks.
Maybe Ali, a follow-up question on that. So what sort of proof points do you look at when you look at these founders or startups?
I mean, I try to find as much as possible, right? So the biggest question is like, can you build, right? And one, can you build with this startup? So what have you done already, right? How much have you actually built? Have you been able to assemble a good team around you? Do you have traction? Do you have customers? Do you have revenue, right? Once you have revenue, it's really easy to tell me to shut up. I have revenue, right? Like, then, like the less of that stuff you have, then it goes more to your background and where you worked before and how you learned how to get to revenue or how you learned how to get to a good company, right? So all of that other stuff matters when you haven't actually built something, right? But once you've actually built something, then I can look at what you currently have, right? So I feel like people have to go like, oh, I went to Harvard or oh, I went to whatever, right? It's because they haven't done anything yet. So cool, you went to Harvard, great, right? Oh, you worked at Uber, that's amazing. But I would much rather see, okay, we have 500 customers and we're doubling that every 2 months, right? That to me says a lot more than no, we went to Harvard. So whatever you could do to prove that you're actually doing something really helps to de-risk it, right? And again, that's kind of it's all about kind of risk versus the reward, right? To a certain extent, and that's how it should like everybody when they're thinking about investing is kind of in those frameworks. So what's the risk that we're making by investing in you, and how are we willing to make that bet? And what have you done to kind of show that you aren't a risky person to invest in?
Thanks. That makes a lot of sense. I guess maybe the next question for me, I don't want to hog up
Oh,
the
wait,
space
oh,
available, would be around. Sorry,
Can
go
you-
ahead, Manny.
Oh, we do have other people waiting, unless it's a follow-up question, because Laura and Balaji and Zarin have been waiting to ask their questions as well.
I'll wait my turn.
Okay, thank you. Laura, take it away.
Hi. I just wanted to say that I went to your website the other day, Ali, and I sent a message, but I didn't think that it was that I was able to put in the pitch deck. And I didn't get a respond email saying that you had received it. Should I fill one out again and attempt to put the pitch deck in?
No, I got it, and I got the pitch deck as well. I think you did.
Oh, okay.
You did end up sending it, so I just needed to respond. Sorry, it's been a busy couple
Oh,
days.
no. I didn't expect a response right away, but and then all of a sudden there was this that I was like, got a chance to be here. So I changed my schedule around. Thank you for noticing that.
Yeah, no, I went through it, and I do try to check them. I get quite a few every day, and so I find it's easier just to kind of put some time aside and go through all of them at once.
Right. There's more to go to that pitch deck, but it's what the company had at the time. So I wanted to send that. Okay, thank you. I look forward to seeing an email.
Sure.
Balaji, your turn.
Hi, Ali. I think it's interesting that your investments kind of have a global scope or global scale. I'm Nigerian myself, so I do know there's a lot of work that needs to be done back home in terms of like fintech and also prop tech. So I have two quick questions. So my industry is nightlife, and I know there's not always a lot of priority based on nightlife because it's not really a life or death situation. But the reason why I chose to pursue this path is that it's really important in community building. And I think Africa as a continent has a lot of potential when it comes to tourism and also the nightlife industry. So firstly, I wanted to know if you're looking to kind of expand the scope of the industries that you work in, or if you're kind of fixed on fintech and prop tech.
Yeah, so I'll basically look at anything, but when the search there, it's also kind of like what world do you want to see? Like that's the beauty of kind of investing, right? Is you're kind of building the world you want to see. So is a world with more nightclubs and bars something that I'm really excited about? Not particularly. But again, if you have customers and you have revenue and you have traction, right, then it's harder for me to like say like, okay, this is a bad investment, right? At the end of the day, I have a fiduciary responsibility to my investors that I invest in things that make money. So if you have something that's $1 billion idea that you've already de-risked quite a bit, it's going to be something I'm going to take a deeper look at. But if it's just a pitch deck without much revenue, without much traction, without much there, and I don't know if people actually want it, it's harder, right? So I actually think things like nightclubs, right, tend to be like nightclubs or restaurants tend to be things that everybody kind of sees and everybody kind of looks at. And so a lot of the problems that those industries have, there's a ton of people trying to build to solve them. And the problems tend to be much smaller than you initially think, right? Versus, most people don't dig into I don't know, pest control or something. And so if you have a pest control business and you're really trying to go and solve that, there tends to be less competition. It tends to be a more unique solution. And those are things that aren't as digitized, right? Whenever I've been to nightclubs, they always tend to be very technology forward, and they already have credit card machines. They already have, things that know how many people are in different spaces, and they have good inventory control because alcohol is a high cost item that's a low whatever. So all those things tend to be solved. So if there's something like, I'm not saying no, right? But it's just trying to kind of give more of my thought process on why it would be a yes or why it would be a no. It really tends to revolve around all those other steps. And I've invested in companies that's help sell alcohol. I've invested in companies that sell marijuana, right? Like it's not like I have some vice issues. It's more there's just a ton of competition that exists in these spaces. And so if you're doing something really unique and you have a lot of revenue coming from nightclubs, that gets exciting. But it just tends to be a little bit harder to actually find those opportunities because so many people are actually looking at those spaces already.
Of course. No, that's really helpful. Thank you. And then just, sorry, a quick question, a follow-up. I know you mentioned you work in like growth strategy roles and also as a mentor for startups. So with the checks that you're providing nowadays, apart from just doing that first investment, what else do you provide to the founder? What other support do you provide?
Yeah, so it tends to be a lot of, kind of mentoring and coaching. But what I find is that the startups that I tend to work with, I don't want to be your COO, right? Like I don't want to be there. I'm not an extra co-founder. And you probably don't need me as an extra co-founder. You probably don't want me as an extra co-founder. And if you do, there's something wrong, right? To a certain extent. But there are things that I have seen or that I have done where I can point you the right direction and you can skip 6 months of bullshit. Right? I can help you with your pitch deck and you can send it to 50 less people. So I feel like that's where the value really comes in is me being able to share some of this knowledge. It doesn't take a lot of my time, it just take a lot of my effort, but it's because I've already done it 50 times that I can be helpful towards you. And so the founders that kind of recognize that and then like go have their plan, they execute for 6 months, 9 months. Hey, now we need our new, products roadmap. Here's the guy that we're thinking about hiring. What do you think of him? And I'll go and talk to them and, help them with their product roadmap. Okay, here, then they go execute for 6 months. And like, okay, now we're about to raise our next round of funding. Here's our pitch deck. What do you think of it? Okay, let me give you feedback. And then let me introduce you to the next set of investors, right? So I think that's where the help become, really starts to benefit you. And then, I think the biggest thing that people don't realize is
Oh, did I freeze or did you freeze, Ali?
I think he froze.
I think he froze. Uh, well, maybe he'll sort that out. I know he'll sort it out. I just wanted to add, I was going to say that maybe some of these social apps, the bar and the nightlife, will cut down on the number of dating apps that are flooding his inbox. Oh, I wonder if I should email him. Uh-oh. He'll be back that way.
Sure, he'll pop back on.
That happened to me a couple of sessions ago. Due to bad weather, he'll be back.
It's technology.
Yes, it is.
Yeah. I want to thank you, Bonnie. I don't remember just how I got connected to your company. But
I figured.
Sorry about that. My computer decided to shut down in the middle of what I was saying. Well, what I think I was saying was that most people don't realize that a lot of venture capital, at least from what I can see, right? And I'm not a venture capitalist long term or whatever, but in a lot of ways, it kind of works like middle school, right? And there's all these rumors and connections and things that get spread. And it's all about like, the ability to kind of tap into that to kind of spread the good news or the bad news about you. And so, so much of the industry kind of works on warm connections and having those people to open up the doors for you. And so bringing in the right people early helps you bring in the right people the next round, and those people bring in the next people. Like it just kind of ends up being this domino effect. So doing whatever you can do to try to bring in the right people as early as possible really ends up helping you.
Thank you. Zarin, your turn.
Hello, hi. So I want to ask, you mentioned that you invest quite globally, which is very interesting, especially given that I'm also coming from a global clientele and background. But also sometimes there are like standard due diligence processes that are accepted, usually more in the, Western side of the world. I mean, we kind of touched upon it, what you're looking, kind of making revenue, the team, etc. But how are you managing the due diligence of across continents, across countries, like keeping up with the teams? It seems it's could be a lot, like like cap table management, different roles, all these.
Yeah. So even though I invest in companies that are operating in a lot of countries, 95% of my companies are Delaware C Corps on top. They all have, U.S. bank accounts, U.S. legal entities. So that makes it kind of easier to regulate, and they kind of have to do the same sort of reporting and financial reporting, right? So I kind of get the same information and data, at least on a high level from that. Even though people are from all over the world, everybody tends to be connected some way or the other. So, I think with almost everybody, you have some connections in common that could kind of serve as a reference if you kind of need to double check that. And I'm tending to write fairly small checks, right? So if somebody really wants to risk their reputation and everything they've done on a 50K or 100K investment, it seems a little silly to me, right? So yeah, I do, a standard amount of due diligence. I go and I dig in and find out as much as I can about people. But I'm not investing $50 million or something where like, okay, for $50 million, maybe you disappear, right? If you could go take that. Like somebody's willing to disappear over 50 grand. And I couldn't figure that out on the Zoom call. There's something like deeper and more wrong, right? Like I think so it's I'm not just like writing checks, right? Like I'm talking to people, trying to get to know them and understand them, and the ideas I'm investing in are multi-billion-dollar ideas in my mind that have some amount of traction, some amount of revenue and customers, and they're sharing these sorts of things. If they're willing to, not go after a $5 billion idea because they would rather take 50 grand and run off, that just seems like a really weird assessment, right? Especially when they already have the traction, they already have the idea, they already have customers, they already have revenue. Everybody's different, but in my mind, I'm not as worried about that aspect of it, I guess. So far, it hasn't really happened. I've made, close to 400 investments. Nobody's run off with the 50K yet.
That's good.
Yes, definitely. Thank you.
Henry.
Yeah, thank you. Maybe a broader question about what you're seeing in the types of investors that are investing in these maybe US-based companies that are working on problems abroad. Are you seeing that there is a growth in those types of investors and the dollars raised in those funds? So I think you sort of nailed it, where there's this growth market out of the US, but I think a lot of US-based investors maybe haven't quite figured that out yet, or they're hesitant to enter those types of markets and write those checks for those companies. What are you seeing broadly as an investor trend?
Yeah, so I think a lot of people are scared, especially scared on the earlier stages, right? Everybody wants to kind of focus on their back door. But if you see a company that's doing $100 million of revenue, I don't think anybody really cares where it is. At that point, everybody starts looking at the details, and starts looking at the materials, and starts having a conversation with the company. Maybe if that company's in the US, $100 million in revenue is worth $2 billion company. Maybe if it's in, you know, Ghana, it's a $1 billion company, but they're at least willing to have that conversation. And so the question's not necessarily like, is there something there? It's more a question of what stage are they in, and you know, can I come, like, if I come in now, at some point other people are going to be willing to come in, right? And you know, the biggest companies from every country kind of end up going public in the US stock market, right? When they get that status of being like a decacorn or whatever. So I'm not as worried about will the company end up having exit opportunities, or will they have follow-on investors? Because I think at some point money just talks. That's a more question of like, can they get to that point? Can they get to that point where they're making $1 million a month, $5 million a month, $10 million a month? If they have enough, is there enough of an opportunity to address? Is this the right team that can lead it there? Is there enough product market fit that they can get to these points? Because at the end of the day, I think later stage investors just care about the capital returns, which makes it a very interesting opportunity actually in the early stages, because there aren't as many people looking in these markets. There aren't as many people to go and shove elbows against, right? Like if I was looking at AI in San Francisco, that there's 500 investors knocking on every AI company's door trying to get in. When you're looking at, you know, fintech in Vietnam, how many people are really open to doing stuff like that, right? Like you end up being one of the first people to go and talk to them, and first people to really understand if this is a legit opportunity. And Vietnam has like 100 million people, right? So when you're looking at these other markets, they're huge markets. Latin America in general, which is where I tend to focus a lot of my effort, has 700 million people, the same GDP per capita as China, but with 2% of the investment that China does. So we're talking about opportunity that's half the size of China, but on a per capita basis, 25x less capital. I think that's like a huge opportunity to come in early. And when these companies get big, right, the Tigers and the SoftBanks and whatever of the world will go and invest and will throw money in. It's just, can you find those things that are going to get Tiger and SoftBank to throw money in later on?
Thank you. Ian.
Yes, you mentioned risk factors. Now you talked a little bit about it, but are there some other specific risk factors that would draw your attention, you know, with an investor or a particular company?
You know, I think a lot of times I'm investing super early, and so it also often has to kind of be like a gut feeling, right? Sometimes you just get like a weird feeling for people, and then having to figure out like, why am I having this weird feeling? And so I feel like oftentimes you kind of know there's something wrong, but you need to figure out why, and like that ends up kind of being a part of it for me. Or that something just seems too good to be true. Like, why is this company that has, you know, 3 million in sales so easy or willing to do a deal with me? Like, you know, what's going on? And so those tend to be a lot of the risk factors that I tend to really really think about. And then, you know, I think one of the biggest things also is just, and this happens in the US companies as well, right? Like the founder's the right founder to take it from 0 to 1, but are they the right founder to take it from 1 to 10 or 10 to 1,000? And that starts to get trickier and trickier, right? And are these people that I think can, you know, really work well with other people and really recruit the best talent, the best talent in this country wants to go work for them. Like when you look at a lot of these unicorns in other markets, they're not successful just because of the CEO. They're successful because they were able to take all the top talent and people wanted to come back and work for those companies. But you only want to work for those companies if you actually like the executives, or if you think the executive is actually somebody you can learn from or grow from. And so I think I'm a bit unique where I actually did that, right? I actually went and to go work for those kind of unicorn founders. And so when I'm going and I'm talking to a founder, is this somebody that I want to work for is actually a big question that I have. Like if I wouldn't want to go work for them, how can I think that they're going to be able to recruit top talent globally? How would I think they're going to recruit top talent in their own market? So that tends to be a big part of the framing. Just, nobody wants to work for an asshole, right? And really come off as an asshole. So I think that's something that you got to try to figure out, right? It's not always as easy as it sounds, because they're also putting their best foot forward, usually because they want to get your money. And so, if you're an asshole to them, how do they respond? And seeing what that behavior is like, I think is always kind of interesting.
So to sum up, it's basically a gut level feeling that you have, as opposed to like an algorithmic approach that some people try to use.
Yeah. I feel like saying gut feeling sounds too unscientific, but it's really what it ends up being, right? Like you end up liking what you like. You end up wanting to, everybody has their own vision of what the world should look like. And so everybody kind of backs their own thing. Even with venture capitalists that I really admire, when I look through their portfolio, if, most of the time, I want to invest in a lot of the companies, right? Because I just don't really care about what they're doing, or I don't care about that vision of the world. Or I don't like the founders for some reason that they liked, right? Like there's all these sorts of things where people be like, oh, I really love this founder. I go to talk to them. I'm like, why? Right? Like, but there's also probably people that I love, right? That they don't get. I tend to like the people that are super scrappy, right? That bootstrap their way much further than other people did, right? Like I went to the Stanford and all these things, but I don't really put as much of an emphasis on that pedigree as I do about what have you actually built. And so other people are like, oh, this person has a PhD and is doing something in robotics. I'm like, okay, cool. There's a bunch of other robotics companies out there. What is this company's actually going to do? So it's just what do you want to see in the world, and how do you make that happen? I think is a big part of it for me.
Yeah, great. That's great. Thank you very much.
Can I follow up on that actually, Ali? Maybe a question for me. Are there specific, I'm sure a lot of it is gut, but are there few or key sort of metrics that you look at in pre-revenue companies versus post-revenue companies, and do you have a process in thinking through how you benchmark it to best in class or things around that?
So I try to go for things that are kind of very simple business models. And so almost everything I've done has been kind of post revenue, right? And it's had customers and it's been growing at a significant rate. So there's not a specific number where all of a sudden it's like, okay, now I think you've unlocked things. But if you've been doing it for 2 years and you have $5,000 a month in revenue, does it really seem like it's that exciting, or that it's something that's really worth spending money to accelerate, right? Like what I really think about as the venture capital part is this is money to help you grow and to kind of double down on this thing that's already proven out. And so is that 100,000 a month? Is that 50,000 a month? It's not like a specific number. It's more like, you know, if you got to $50,000 2 months after you launched, to me, that's like super exciting. That's more exciting than taking $100,000 2 years after you launched, right? Because what's the growth trajectory? And at the end of the day, you know, if you're going to be a unicorn, you have to hit certain metrics. If you're going to be, you know, $100 million company, you have to hit certain metrics. Are you actually going to be able to hit those metrics? Is it something that actually people actually want? There actually is product market fit. Customers are actually going to use you. Customers are going to talk about you. There's going to be the spread. That's really what I'm trying to make the bet on, right? So the more data, the more customers, the more revenue, the less, you know, risk there is, hopefully, and the better the chances that you hit these metrics you need to hit in order to unlock the next things.
Oh,
Thanks.
how?
Hey, thanks, Ali. I have a couple quick questions. One is, after you invest, how do you keep in touch with the founder? How do you, like, what's the cadence? How do you like to keep the communication going?
So we're usually connected on WhatsApp. And so, you know, I ask that my founders send me monthly updates. And then it really kind of depends on the founder, right? Like how often they ask you questions or how much they want to, you know, tap into you as a resource. Again, with, you know, kind of several hundred companies in my portfolio, I'm not really trying to chase people down, right? Like if I'm not like, oh, let me help you, right? Like that just doesn't really seem like the best use of my time. But when they know that they need my help, I'm always available. So I try to respond to everybody within an hour or two, and you know, be very responsive and give my insights or make the connections or whatever. And so what I find is that, you know, in the beginning, there tends to be a lot of communication, you know, as they're kind of doing their initial fundraise, as they're kind of taking this money, figure out what to do with it. And then they execute their plans. And then again, later on, they have something that they need help or they need structure, they need feedback. And we talk a lot for a week, and then they go and they execute again. And anytime questions come up along the way, we go back and forth very quickly on WhatsApp, figure it out, and then they kind of go back to, you know, their daily lives, and I go back to mine. And then you know, if we happen to be in the same conference or the same city or whatever, we'll go and we'll do a deep dive together on what's happening. But tends to be less of a focus for me that in person, and more of let's try to figure out, you know, what's going on and how to be helpful through Zoom or WhatsApp or other mediums.
I've heard investors mention over this forum that a lot of companies run into hard times or their problems become exacerbated because they don't go back to the investor for help and advice.
Yeah.
Yeah.
I think that's definitely an issue. And you know, I've had some companies that kind of ghost me, right? And it's like, I gave you money and now I don't hear from you. Like, what's going on, right? Like, I don't really want to go and have to chase you down to get my monthly update, right? And some companies, instead of doing it monthly, decide to do it quarterly. Instead of doing it quarterly, decide to do it yearly, and all of a sudden you don't hear from them for a year. It just seems like a very weird way to run your business in my mind. You know, I feel like you should be giving people can only help if they know what's going on and they know what the problems are. And if you are so great that you could solve everything by yourself, but you could do everything on your own, cool. But I'm not like that personally. So I feel like there's very few people that actually can solve everything on their own. And you should be asking your investors and your advisors for help because they believe in you, or they believed in you at some point, right? To make that jump with you. And so what I find is that people, when they're not performing, they feel ashamed or there's some fear there, and they stop communicating as openly. But that's actually when you should be communicating the most, right? I don't mind if you lose my. I mean, look, I always mind if you lose my money, right? But it's not as big of a deal if I know what's going on. Because then I also feel like I can at least be helpful, or I saw what was happening and it wasn't this complete surprise, right? But if you ghost me for 6 months, then all of a sudden you come back and ask me for money, or all of a sudden you're like, oh, this shut down. It's like, okay, like I can't do anything to get my money back, right? Like that's already gone. But the next time you come and you have a new idea and you have a new startup, probably not going to be as likely to come and invest as I would if you had actually told me what you were doing all the time. I saw what you were doing, and some things are just out of your control, right? There are a million reasons why startups fail, even successful startups, right? That's why I also tend to get scared off by these like late stage growth investors that do Series D and Series E and blah blah blah, like because they're still investing and the upside is 2x or 3x, but there's still a chance these companies go to zero. And for some reason, people don't think there's a chance these companies go to zero. But we've seen time and time again, big, huge companies that have been around for 100 years go to zero. Any company can go to zero. There's so many things that can happen, and even the best run, whatever companies will stumble. And so if you're at least open and upfront about it, then it makes it easier to get you help or to try to fix things.
Thank you. Tina, what's your question?
Yeah, thanks. Ali, thanks for the candor and the thoughtfulness. Since you are investing at such an early stage, are you expecting a Series A? Because I'm in a position where I need very little capital to scale, and it's gross margin driven, so there may never be a Series A.
Yeah, I mean, that's usually kind of what I'm expecting, right? Like every company is unique, but most of them, like once you take venture capital dollars, you're kind of setting up to join this roller coaster, right? Of going from pre-seed to seed to Series A to Series B to Series C to Series whatever, and eventually try to IPO. And part of it is those other stages have potential liquidity options for me and my investors, where we might want to take some of the risk off the table on a Series A or Series B. I tend not to do that as much, but venture capital in general tends to have that in the back of their mind. And so if you're somebody who's not going to be taking these other later stage investors, or there's not going to be other rounds, it just kind of offers a question of like, okay, well, how am I going to get liquidity? And so if you have a very clear plan about how your investors are going to get their money back and get their money back in a time frame, right? Because in general, right, like I'm investing out of a fund. That fund has a horizon of 10 years, 8 years, 12 years, whatever it may be. And I'm supposed to provide that money back to my investors. So
yeah,
it makes it harder for me to invest in something where I'm like, okay, I'm going to give you money and you're just going to grow a business that's huge, but I might never get that money back. And now I can't give that money back to my LP, so I can't show that I gave them cash back, because when I'm looking to raise my next funds, it's going to be based on how much money did I give back to people. And then if you don't have a Series A or Series B, that Series A, Series B, tell me what their value, the cash that I have is there, right? Otherwise, I'm kind of just giving some estimated whatever that doesn't seem reliable to people.
Well, the first $500,000 that I received, 200,000 of it is from one of it is the former CEO of Silicon Valley Bank, and his former VC partner and So they are expecting a liquidity event or some sort of a large ROI. But the thing is, I've got a unique business in the sense that it's gross margin driven, and because we have so we're selling cabinetry. It's an $18 billion industry that's horribly inefficient, and so we have some inherent advantages, including our gross margin is growth capital because we have no capex or inventory or working capital needs. And so I'm also speaking with a family office, but so this could be levered up and issued special dividends, and or if we are successful at getting 100 out of 30,000 penetration, 100 kitchens out of 30,000 just in the kitchen space, and not even going into other categories that we can go into. Our top line would be between 400 and 500 million. So if we're talking about a 5x marketplace return multiple, we're talking about a 400 to 500x return on the current round. And but the current round is ostensibly $1 million, but in truth, I only need 50,000 to make our platform version 1.1 or version 1.2 completely scalable and self-service. And so that's kind of like where I'm at right now. So I'm curious, but either way, I appreciate it, and I'll send you some information for you to consider. Thank you.
Sure, that sounds great.
Oh, thank you. Next question. Please feel free to jump in. You have an investor here giving you advice. Go ahead.
Hey, yeah, I just want to ask Tina. So I think we are in a similar business. So we are a B2B marketplace for builders to directly purchase materials, and we have cabinetry as well. We just launched our platform. So if you're looking for another channel to market and sell your goods to businesses, feel free to join as a manufacturer. I'll reach out with our platform website.
Sorry, maybe a question for Ali. Ali, how do you go through the process of sourcing startups, especially out in LATAM and Vietnam and stuff like that? How do you go through that process, and then how do you win those deals? How do you get in as that first check? I guess I'm keeping it very open-ended. It's very basic question from my side, but curious to hear your process.
Yeah, I think in general, deals tend to come from a few different places. I have a syndicate. The syndicate has 4,000 LPs. So through that, I get asked, like, those LPs also invest in other deals, other funds. They're also angels, right? So they see stuff. If they see stuff that's interesting and they want more capital, they introduce it to me. I now have several hundred portfolio companies. Each of those portfolio companies has founders and founded teams. I was their first check. So when other people come and approach them, they direct stuff towards me. I have 20,000 plus followers on LinkedIn. So they send me stuff. And then so a lot of it ends up being kind of random inbound or like warm intro-ish, right? From these different connections or these different networks. And then, I go to pitch competitions and I see stuff at pitch competitions that I like, or I will go to online demo days or in-person demo days. And so I find that, deal flow tends not to be the problem, especially when you're going at the earliest stages. I think trying to get into rounds becomes a little bit more competitive only when it gets to be kind of these later stage rounds where you need to have big checks in order to get in. But with the first checks, people really want more than just money. They also want the help and the advice and the guidance. And so I think that's where I can really come in and be helpful. So far it hasn't been difficult to get into rounds. But yeah, I feel like deal flow is kind of coming mainly from those sorts of places.
Got it. So it's almost like very much like a network effect, right? You've got your network that sort of helps you with that a lot more.
Yeah. And
awesome.
I mean, I also talk to 50 or 60 founders every week. And so even if I don't invest, if I was helpful, they also tend to, refer other people to me because I was helpful to them.
Nice.
Tina, did you have another question?
Me?
Yes.
Tino?
Yeah,
No, sorry. I'll lower my hand. Sorry about that.
Okay, next question.
Well, Ali, I touched on this earlier, but what do you think of the algorithmic approach to evaluating potential venture investments? Because some people advocate that you can reduce everything to a kind of a mathematical model to figure out which ones will work. Well, what do you think of that?
So I've had people approach me with some of these sorts of things as well. And I think it works when there's like data and information in these later stage deals. You can kind of have enough to go and start getting a regular pattern. But in the earliest stages of companies, it tends to be fairly irregular, and the data isn't always as clean and isn't always as I guess as clear. And so, I wonder if, or at least my thought process has been, look, when you get to like a public company stage, everything's kind of registered, like everything's kind of finalized about what you need to have, what you need to present, how that data needs to look. When you're at these early stages, some companies aren't as good at that. And so, if you just or look at the companies that can make the best presentation or that can pitch you the best, I think you end up being biased and not necessarily biased in the right way towards people that can actually build or people that can actually execute. So personally, I'm also often asking myself, like, okay, this pitch wasn't good, but was it good because, or like, was this person bad at pitching, or is this a bad company, right? And if this person is bad at pitching, are there things that I could do to make it better or easier for them? And then they can get good at pitching, or, I look at 300 pitch decks a week. I hear 50, 60 pitches each week. So I'm having all this practice of doing it. You as a founder, how many pitches do you actually see? How do you actually know what a good pitch is, right? Everybody has their own ideas. And so I feel like oftentimes I'm like having to just kind of point them in the right direction, and then they could go, or they could actually build a good pitch or present their idea in a clear way. But just because it's not clear what a venture capitalist, how they think your business is, doesn't mean it's not a good business. And I find that I think it'd be hard to analyze that or systematize that in a way that some machine could just go and figure out, because even the investors have a hard time figuring it out.
Right. Yeah, no, I could think your point. I mean, I always feel like VC is a lot more like Italian banking in the 15th century than it is like some kind of a machine,
Yeah. And I think later stage stuff, right? Series B, Series C, pre-IPO, that to me seems like there should be less of a gut feel. That to me feels like it should be more standardized, right? Like, I don't look at your financial, like, I don't do an LBO model on a pre-seed startup. It's just like there's no cash flow there to leverage, right? Like, you can't look at things the same way. There's no point. And anything you tell me in your financial model, I just have to assume is at least 95% bullshit, right? So It's less about that. Like, of course, you have some big market. Everybody shows their companies go to $100 billion valuation in the next 5 years. It's like very few companies actually do that. And so, what have you done and where do I think you could actually go based on that is really what I'm trying to figure out.
Got it. Thank you.
And Ali, do you see like, what are the majority of your investments? Are they typically like safes or convertible notes, or are they just like completely scattered across the board? Are you seeing a trend toward one versus the other, at least at the early stages?
Yeah, safes have kind of become the standard at this point. In the YC safe in particular, and that has switched from a pre-money safe to a post-money safe. And yeah, I don't think there's a point in the beginning to go and spend money on actually giving out shares and equity and all this sort of stuff. Like, why are we paying lawyers $100,000 for something at this point, right? I'm only giving you 150. For you to go spend 100 of that on a lawyer seems like a really bad use of funds.
Yeah.
So doing a safe, it's standard, it's easy, we can figure it out, and there's no back and forth with lawyers. There's no back and I want this to be as cheap and easy as possible for you because I want it to be as cheap and easy as possible for me. So the less we try to get, super cool or super sexy by doing a convertible note or adding in these special terms, the faster and easier it is for both of us, right? Like if you just do the standard C safe, you just have a Delaware C corp, you just have these things already ready to go, then I can move quicker and faster, right? When you have a Wyoming corporation and you have blah blah blah, just then I have to go back and I have to review it and I have to go and get somebody else to review it to make sure that I didn't mess it up when I reviewed it the first time, right? It just adds more cost, adds more time, adds more headache. So I think especially in the early stages, it's not worth the effort to go and try to be customized.
Ali, I'm Brian Neer. I didn't get a chance to introduce myself before. I wasn't able to pick up, but now I'm at my desk. Thank you very much for doing this. Extremely impressed with what you are doing. I heard about you many times, so I wanted to come today. I was on Wall Street for 30 years. I run my own venture firm now. All the money's raised because it's from me. And I'm trying to deploy the same way you're trying to deploy. Like the way you answered those questions is like a clear way of thinking about like what I've been trying to say. One question I had for you, well, I have many questions. But one question is, you said a lot of your companies, some huge percentage end up going through Y Combinator. Now, is that because you're pipelining them? I've made 15 investments through Y Combinator. 2 of them are unicorns, so I'm super pumped about that platform. Are you pipelining them into Y Combinator, or are you picking them from like people who are applying to Y Combinator? That's a huge percentage you just described, and it seems like a massive outlier. So I'd love to hear about that.
Yeah. So Y Combinator has shifted a lot over the last 2 years. So,
Yeah, they have.
In 2020 and 2021, there was a much bigger focus on emerging markets and on kind of simple business models, which tends to be kind of my sweet spot. So I tend to do a lot of emerging markets and I tend to do a lot of kind of basic model in marketplaces, fintechs, things of that nature. And so, a lot of the companies that I was looking at kind of fit into that model where they had, really solid founders. They were approaching me early. I was seeing them and they were going after, these big problems. And so they were able to kind of get the traction, go through YC, and then, come out and raise a lot of money. Y Combinator also has a lot of they rely a lot on their alumni and they rely a lot on their own kind of recommendation systems. And so I had YC founders that I knew that could help and coach them and with the application process. So I think that kind of helped expedite things. And that was a huge boon kind of in when YC was letting in a lot of these kind of companies. But when we now look at emerging markets in YC, Latin America has gone from like 50 companies down to 1 or 2. India has gone from like 30 companies down to 1. Africa has gone from 30 companies down or 20 companies down to 1. And so it's less likely, at least what I'm seeing out of these batches, for me to get companies in. And you know, the focus is also shifted, right? So they're no longer like, when you look at the current batch, it's kind of all AI and it's all LLMs, and every other company is an LLM for this or an LLM for that. I still think there's a huge opportunity providing these kind of marketplace type things to, you know, countries in Africa, to countries in Southeast Asia, you know, fintech services, all the kinds of things I talked about earlier. So I imagine that my percentage of companies getting into YC is going to drop, just because one, they're no longer as focused on the number of companies from emerging markets. They've also kind of dropped or changed their focus, so they're no longer kind of looking at the same sectors, and just the cohort size has dropped. So they went from 400 companies a batch back down to 200 companies a batch. You know, I think that has also, part of the explosion was kind of during the pandemic, right? And now as you're kind of trying to go back towards more stuff in person, there's all these kind of factors that relate to it. But you know, I think part of the reason why I had the success was before they were looking for just really great founders anywhere in the world. I think during the pandemic, and now they're kind of looking for, you know, really great founders focused on AI. And so I feel like that kind of narrows the view. And I think AI in emerging markets is much further behind and isn't as big of a focus. It probably shouldn't be as big of a focus for investors, because I think it's going to have a hard time actually making an impact in these markets.
Thank you.
So I have a bit of a follow-on question to that. So it just seems like, and with all due respect, right? A lot of people seem to be sourcing from the same sources, right? Source their deals. So at what point do you lose that contrarian edge potentially versus what everyone else is kind of doing? And it's, you know, Bonnie might have a word or two about this, how VCs or maybe tend to be lemmings, and you kind of follow on. Absolutely. I mean, you kind of follow what the other VCs are doing. So I'm just kind of curious, like where that, at what point do you lose the, I don't know. Yeah, I think you.
Yeah.
That might just.
So I would also, I would question the premise, right? I would say, why is it like everybody finds these companies exciting, so everybody wants to invest in them? Why is that necessarily a bad thing? The reason we're kind of assuming it's a bad thing is that we're saying, okay, like if everybody's looking at this thing, the price is going up, and so the price going up kind of matches expectations or lowers the expectations, and then eventually you're paying too much for the expected outcome. My whole strategy, right, is let me find the things that everybody's going to love, the thing that's like in public markets, you have to be non-consensus right. You're right. You have to find something that not everybody else thinks is going to be successful that ends up being successful. In venture, I think you have to be consensus right, but early, right? Because in venture, I'm the first check. I'm not going to be their last check, right? They're going to need other people to come in and to believe in them and to follow them. So I'm going to need other VCs. I'm going to need Y Combinator. I'm going to need whatever else to back these companies, to back these founders, to back these people after I come in. So I think it's not a bad thing that there's consensus around these ideas. I think It's about finding these ideas that are going to be consensus earlier than anybody else.
Oh, totally. Yeah, yeah. No, I see that. And if it changes greatly that you're the first, well, I know you've mentioned you're literally the first check. So if they then go through YC, then that's then you get a lot of that juice right out of the squeeze. So that's a very different, I mean, versus
like,
maybe I thought you were sourcing or getting all your deals from YC, but
oh, no.
I think
So most of my companies that I invest in before they get into YC, and then they go through YC, and then I get the markup of YC, and I get the markup of everybody else seeing them. And again, I think this is a strategy that worked before because a lot of these founders in emerging markets didn't have the connections and the network of Silicon Valley. And so going through a program like YC just exposed them to more people. But I think that's actually been one of the detriments is now most VCs in Silicon Valley don't really know how to invest in emerging markets. And without YC kind of giving them a stamp of approval, they don't know who to invest in these markets. And so a lot of them have kind of backed off or cooled their investing. But I still think there's a huge opportunity. So, at least what I'm seeing, the same companies I would have invested in last year at 10 or 12 million, I'm now investing at 2 or 3. I think that's been a huge benefit for my fund. And I think that at some point, I mean, all this stuff is cyclical. At some point, emerging markets is going to get hot again. At some point, marketplaces or fintech is going to get exciting again for people. And, the valuations go back up. And so the fact that these companies actually have traction, have revenue, have customers, at some point is going to be exciting for people. So that's kind of how I try to think about it.
excellent. Thank you.
I'm wondering if ER Accelerator is on your radar as well.
If which one?
Do you know Entrepreneurs Roundtable Accelerator, Murat?
I don't think so.
Oh, I'll introduce you because emerging markets is also very much on the radar. In fact, they have accelerators. They work with governments around the world for that. I'll make the introduction.
Oh, that'd be perfect.
Okay. So thank you so much. I know we've run over time, and I appreciate all your advice. This was fabulous, Ali. And any parting sage words? I know you always have something to say, and I'm always happy to hear it.
Yeah. Always have something to say. I think there's a lot of founders on the call, right? I think it's less about what I'm saying and if what I'm saying is right or whatever, but more about finding somebody who you actually like agree with, right? Like I think there's a ton of venture capitalists out there, there's a ton of firms out there, there's a ton of investors out there. And so you could think that I'm completely full of shit, but there's somebody else out there who's going to have viewpoints that you agree with. And when you find that simpatico type relationship, right, then it makes it much easier. At the end of the day, like a venture relationship, your startup relationship lasts longer than a marriage. Right? These are 10, 12, 15-year relationships plus. And if we like each other, right, we're going to probably sign up for the next startup as well. So it shouldn't just be about money. It shouldn't just be about, that aspect of it. It should be about, do I actually like this person? Do I actually want to talk to this person? You don't want to be the one who's not communicating, right? You don't want to be the one who's afraid. You don't want to be the one who, can't open up, right? Like I think a lot of this is about being able to open up and get as truthful, as honest as you can with each other. And so the sooner you can get there, right? The more open and honest and heartfelt you can be, I think the better the relationship goes. So I think that's something that I would really recommend to people is let's, try to find somebody that you can open up to, that you can actually, feel that they're opening up to you, that you actually feel connected with.
It's funny, I write a weekly editorial and I thank you for that. I'm going to write an editorial about that. Instead, it's not just about product market, but it's about founder investor fit. So thank you.
All right, thanks, Fanny.
And I thank everybody for attending, and we'll be back in 2 weeks with yet a different investor. And we're going to invite you back again too, Ali. Thank you.
All right, thank you.
Thank
Thanks,
you.
Great job.
Thank you.